What the heck is crypto tax? How do I even file it? All these forms here are driving me nuts. Help, I'm drowning here. Alright, you've gotta watch this video all the way through. And no matter where you live, USA, France, China, Dubai, Singapore, if you've ever traded crypto, taxes are coming for you. It's not about if you want to file. It's that the system assumes you're dodging taxes unless you prove otherwise. Tax pressure has been ramping up big time and the rules are getting tighter every year. This year, the IRS in the United States started cracking down, sending out notices to audit crypto trades via central exchanges, and a ton of folks who ignored this are now freaking out. So this video is for anyone who wants to get a grip on crypto taxes, to file them this year in the US or prepare what's coming in other countries. I've broken it down into 5 key questions to make it clear. Plus, I've got some handy websites and tools to help you sort your records. Because if you're like me, you've got a lot of transactions, and that won't fit on one small sheet of paper. Subscribe to my channel, add me on Telegram, and I will send you the full resource list. Link is in the description. So first question, let's talk about the US to illustrate all that. What is a 1099-DA form? Before you file taxes, you need to know about this form. It's a new tax document the IRS rolled out in late 2024 just for reporting digital asset trades to make sure they get their cut. Because even though it's an IRS thing, it's like a global template. Don't be surprised if your country copies it. Maybe it's already sitting on some tax office desk just waiting for a signature. If your country is strict on taxes, like France for me, they'll likely be among the first to jump on this. It's just a matter of time. So back to the 1099-DA form. It can be provided to you by platforms like Coinbase, Kraken or Robinhood. They do it for you and send it to you and to the IRS. Basically, the second you sell crypto on a central exchange, the IRS knows exactly how much you made. In this system, not reporting looks shady, and reporting it wrong, that's a big red flag. If you use decentralized exchanges, you will have to fill the equivalent of 1099-DA form yourself. Second question. In what cases do you get this 1099-DA? If you are a US tax resident and you sell crypto, of course, but also if you swap, if you withdraw or pay with crypto, it will be counted as a taxable event. If you are not in the US, every country's rules are different, but the core idea is the same. They want to know how much they think you earned to decide how much tax they think you owe. Understanding the US 1099-DA prepares you for when your country's tax rules catch up. Lots of countries are already taxing crypto gains, like capital gain. Like France, flat 30% on capital gains, you know. Some countries are better, like Germany, where holding over a year makes it totally tax-free. Policies aren't perfect yet, and they are not the same everywhere, but the trend is clear. Governments are linking up with blockchain wallets data, and oversight is only getting stricter. Look, I've been through the tax ringer in multiple countries myself, and let me tell you, it's a headache no matter where you are, crypto or not. When I was in France, working for an import-export company, my salary was taxed so heavily, it felt like the government was my business partner. Then, when I started my own company in France, the tax bills got even crazier. Layers of corporate taxes, social contributions, you name it. It's France after all. It was such a burden that it pushed me to back up and move to China. It was one of the reasons. In China, I lucked out with a 6-year tax exemption on my income. Sounds great, right? But don't kid yourself. Tax freedom's rare and usually temporary. Then, I moved to Thailand. I was freelancing for a US company, paying myself a salary, and the Thai tax system made me jump through hoops to stay legal, filing as a foreigner, calculating withholding taxes. It was a nightmare of paperwork and stress, all to prove I wasn't dodging everything. All to prove I wasn't dodging anything. Then I moved to Dubai. That was a breather. No capital gains or income taxes for my situation, which felt like a dream. But now I'm planning my move to New Zealand. I'm staring down their tax system, and it's no joke. They've got hefty rates on income and gains, and the compliance rules are intense. What's my point? Taxes follow you everywhere, and crypto's no escape. Every country's got its own maze of rules, and if you think you can just ignore it because you are not in the US, you're in for a rude awakening. The forms, the deadlines, the audits, it's enough to make anyone panic. And trust me, you don't want to be caught off guard when the tax office comes knocking. That brings us to the third question. How do I file my taxes on 1099-DA exactly? You have to do it yourself if you didn't get the form too. If it was sent you via Kraken, Gemini, Coinbase, it's just the broker part, their job to do. So I checked all that. I myself used to file my own taxes in the past, but now my advisor takes care of it. So for this video, I double-checked everything with my tax guy and my lawyer, just to keep it tight. And I'm sharing with you what we saw. But, and it's a big but, this is a general process, not a one-size-fits-all. Complex trades mean complex problems. I'm not a CPA, and this isn't official tax or financial advice. I have to stress that out. This video is here to help you see the big picture. For big money, double-check with a pro tax advisor or accountant. A bad file can cost you extra tax, interests, fines, or worse, get flagged out for tax evasion. So don't wing this stuff. Alright, step 1. Check the 1099 DA given to you by the exchanges to make sure the transactions and profits listed are correct, especially the cost basis. More on that later. So yes, we will check that the forms on my computer here. It will be better. So first, alright, so you may have gotten a 1099 DA, or you can get this one here, and you can see what will be inside, so proceeds, cost, or other basis. This one is really important. So that's the date it was acquired, the date you sold. So you have this kind of form here. The first part will be sent by the broker to the IRS. And there is also a 1099 MISC. 1099 MISC is for airdrops, staking, rewards. So that's important. Before that, we couldn't report clearly airdrops, staking, and rewards. But as you can see here, you will get the question popping in your head like, but I have so much transactions, how to report the details of that? For that, you have step 2, organizing your trades using Form 8949 to report every capital asset sale. So let's have a look at that. All right, here you can report everything, like the reference for Bitcoins, like 0.18 Bitcoin, the date you got it, like 10 February 2022, the date you sold it, because, for example, 12 July 2025, the proceeds, so the sell price, like here, and this one is very important, the cost basis, like 22,000. This one now is okay. How much you made? It should be 94,000. So it's a simple example. If I bought 1 Bitcoin and I sold it, of course, we don't sell our Bitcoins, but it's to illustrate. You have to report everything, even if it was on a DEX, decentralized exchange. You have to report every disposition of capital assets. So this list can be quite long, very long, and these 2 sheets of paper may not be enough. For that, we have tools that we will evoke in a few minutes. Step 3, we will then add up all our Form 8949 transactions and plug the totals into Schedule D, so that we can figure out our tax bill. What is Figure D? It will be another form, because we like filling up forms, of course. So here is the Schedule D, and you have here the totals for, in this 8949 form, you will also report sales of other stuff like real estate, precious metals, everything. And then you put the total here, inside those cases, inside those fields here. All right, and then you can complete your income form. Transfer all that into your main tax form, Form 1040, and then you will be done filing. So if you are in the US, you know this one. US individual income form, you've seen that one before. So you just transfer all the info into this main tax form, and you're done filing. In short, 1099 DA is your statement given by the exchange, by the broker. Form 8949 is a detailed list with stuff like you did also on decentralized exchanges, and Schedule D is the summary. And 1040, it's just your income statement. So that brings us to the 4th question. What do we need to pay attention to? We need to track cost basis if we got a 1099 DA, because here is the big issue. The 1099 DA usually only shows your sale price on the exchange, not what you paid to buy the crypto. For example, because sometimes they don't have this information. For example, let's say you bought ETH and Coinbase for 2,000 and transferred and sold it on Binance for 3,000. The 1099 DA from Binance might just show 3,000 as your profit because they don't have access to Coinbase data. But your actual gain is only 1,000 without a cost basis record, the IRS and Coin. And based on the information Binance gave them, might tax you on the full 3,000. And you are overpaying. So, and if you don't know your profits, the IRS will decide for you and they'll assume you made bank. Some folks think, all my trades are on the blockchain, I'll just export them when I file, my taxes. That's what 99% of small-time traders think. and they rewrite it afterwards if they don't check the data. Blockchain data doesn't tell you when, where, or how much you paid for that ETH that clearly, especially if you spread across multiple platforms and wallets. Good luck remembering what you paid for each token without notes, without tracking everything. That's how people get wrecked. You have to track everything. That's your responsibility. According to the IRS, it's your job. So, fifth question, how do I keep track of my cost basis? So, fifth question, how do I keep track of everything? I have so many transactions, Cédric. You need structured records and notes. And here are two solid ways to do it. Option 1, use automation tools like Coinly or CoinTracker. Those are really great tools. They can export the data coming from exchanges, from wallets, from blockchain. You can put your wallet address or connect it directly to the wallet program, the Web3 wallet like MetaMask. You just connect everything and they will extract all the data. Let's have a look. Coin. For example, here we are in coinly.io. Look at that. You can connect everything, every wallet, or nearly everything, or just here, paste your wallet address, like cedricbo.eth if you are using a name service, or just the wallet address. And what I like with Coinly is that not only you can do France, the US, a lot of countries, especially European countries, that are sometimes hard to find on other tools. And the integrations and the platform integration is really crazy. 20 pages you will find. And after that, they will help you fill up all the forms. They will prepare the 8949 form for you, the Schedule D for you. You will just have to report the final stuff to your 1040. Here we have CoinTracker. I don't know why it's displaying in German, but hier genau, ich bin Französisch, and then you can connect around 500 tools, wallets, exchanges to get the data, and then do the same thing. Let's have a look at other countries. Yes, we have a lot of choice here. Look at that. There is CoinTracker too, with a lot of countries. No, just a little CoinTracker. There is BlockPit too. So it's the same every time, but here, so I will not show you the countries and integrations again. Let's click on Sample Report so that you can see what they will export for you, those kind of tools. So let's say I'm in the US. What will they do? Tax report. It's a sample tax report. So here you have like a quick summary and they will fill this form. Look at that. And you can check everything with them before they export that, of course. And everything is so clear. This form 8949 is filled up for you. And then you have the totals here that will be reported here on the Schedule D. And of course, you checked the cost basis every time with the tool. If there is no cost basis, you will get an alert and it will ask for you to complete it so that it's not zero. All right. And then Schedule 1, Schedule D, everything is done for you. Was this one too? I didn't even know. I thought the 1040 you had to do it yourself, but it's prepared for you too. At least you know where to put those numbers. I love this kind of tools. It's not a linear. So much clearer, so easy. And then yeah, you have Appendix 2 with all the details. Look at that. If you provide that to the IRS, they can say nothing. It's so clear. Look at that. And it's all generated automatically. Don't we love this kind of tools? It's making our life so much easier. I don't know if you have a lot of transactions like me, but for me, I just recommend using these kind of tools. Here you have some notes you can read. All right. Or if your country is not in their list, they also have generic reports for every other countries that you can use everywhere or that you can keep for later. For example, if you are in a country that's not listed in any of those tools, you can do this one, international, and keep that for your records. If someday someone asks you, some IRS equivalent asks you to prove your income and give them all the data, because they love the data and they love to track everything, you can provide them with that too. So there's a lot of tools like that. Token tax, I think they just have 5 countries, 6, 7 countries, the 5 I's, so the US, Australia, New Zealand, Canada, the UK, India, and what's the last one? I think it's South Africa. But yeah, it's always the same kind of tool. You can find others. There's also CoinLedger. I love CoinLedger because they also have a lot of blog posts and stuff to teach you about all that. If you want to know more, to get more infos, get more knowledge about all that. But my point here is it's not an affiliated video. I'm not making money with those tools I'm sharing with you. You can choose, you can compare them and choose the right one for you, the one you prefer, the one that's more ergonomic to use, that you like to use, that has your country, you choose. Those tools can import your trades and generate the forms for you. I will put the links in the comments, or you can ask them on my Telegram, so check them out and pick one that works for you. If you are in France, just like dupe. The one I just saw you, they have French. They have France, let me show you, with Form 2086. Let's say I'm in France, and they will provide you with, this one if you have French, and they will help you fill the 2086. Yeah, it's here, 2086. And yeah, do all that for you. But I said that you had two options. Option 2, you can make your own spreadsheet. If you love doing Excel files or Google Sheets, because sometimes tools aren't perfect, or because you don't want to share this info yet, because you are afraid of a data leak. You don't want to connect your wallet to a website. Okay. Or because some decentralized exchange data doesn't pull through correctly, or errors, or bad imports. Or bad imports can make it look like you are dodging taxes. So you can do it yourself too if you want. But yeah, if you want to report taxes to your government, I think you are taking those risks already. Anyway, taxes aren't a monster, but if you don't get a handle on them, you're setting yourself up for major tax risk and messy asset management. You don't need to be an accountant to use that, but you gotta know what you earned, or the IRS or equivalent will assume you are rolling in it and tax you accordingly. Don't wait for the tax office to come calling before you check your wallet. I'm Cédric. Let's clean up your crypto mess before it turns into a tax nightmare. Catch you in the next video. Merci et au revoir.